Hello everybody, this is Teddy Keckstead from Forex Trading Unlocked, and we are here today on Wednesday, March 10th, 2021 with a Forex market analysis for you. And before we get into that, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. We also want to remind you to subscribe to our YouTube and Twitch channels. If you have not, please do that, and also don't forget to like and share it with your friends and online trading community people that you interact with. And with that, we're going to get to our webinar. So we have the live action screen. And yeah, you're actually seeing my face today. There's a couple people that said, how come we never see your face? I'm like, well, I don't know why you want to see that, but we'll have it up for today. So we have the forex-trading-unlock.com website pulled up for you. So we have some interesting things to talk about today. The dollar index sparked a high yesterday and also set off a short-term sell signal here in the dollar index. This right here is a bearish engulfing line sell signal. So what does that mean as far as how far can we go to the downside for this? Well, we can take a look with just a little fib retracement, and if we take the low most recently that we are coming off of and this high from yesterday, we can come up with a couple little levels for you. So we're going to take this and we're going to find the 50% right here, and we're going to find the 0.618 right here. So this is going to be our downside corrective target area here, somewhere around 9109 to 9079. That would also keep this the last higher move low, intact. This would be a key area, 90.62. The dollar index falls below this, then I think we're going to have an issue. Now, the dollar index, remember, is composed of all the currencies out there, all the major currencies and currency cross rates, rather. The euro and the pound being the two biggest weights. We are going to go and discuss these. Remember, we have the oil trade that has been on the table. Interestingly enough, we have the 30-year Treasury bond, which also is on the table. This one bottomed out the other day and has been slightly moving higher. Today it's pretty neutral. There's a big bond auction at 1 o'clock today. That could shake things up. Then we have the US dollar gold market, which set a bullish engulfing line buy signal yesterday. This is big for the currencies, especially for the yen. And as we get through these markets, you will see what I'm talking about. So this here is a bullish engulfing line in the gold market that is going to come into our currency plays. By the way, look at Bitcoin today making higher move highs. We're going to tie it all together for you folks. All right, so let's go to the Euro US dollar here. This is our first currency cross that we are going to look at today. Let's see, we got anybody in the chat room yet? We do got a couple people. Now, here what we have here is a short-term buy signal. So as the dollar index turns, so does one of the major currencies in the dollar index. Now, this market has been in a bear market since the beginning of January. Remember, we topped out in January. We've been making consecutive lower move lows and lower move highs. We made a significant low at the beginning of February. We rallied and topped out at the end of February. And since then, the Euro US dollar has been in a free fall until yesterday. So right now, as far as where are we going, are we bullish? No, we're looking at the dollar to be under a corrective mode. The oil trade is not necessarily impacting the euro as much. However, higher oil prices do keep the euro from rallying very strongly against the dollar. So we're going to pull up a little fib retracement from this recent high and down to our low where we had our buy signal yesterday in the euro. And let's come up with a couple numbers for you. So for the 50% and also the 0.618, this gives us a nice target band for a retracement. Let's get this fib out of the way so you can see more clearly. So right now we have this buy signal. This is a this is a piercing line signal for the Euro US dollar. In fact, just so that you, in case you want to look it up, piercing line buy signal. Okay, there we go. Oops. And put that right there. So that's what we had yesterday in the Euro US dollar. Right now it's targeting about $1.2037 to $1.2083. Now, we have a short-term top that happened in oil actually, which if you go to, when you go to forex-trading-unlock.com, if you go to our nav bar, you can hit the markets tab and we go down to commodities, and this will give us all kinds of futures to look at, everything from meats to grains to energies, metals. So we're going to pull up the oil chart here. Now remember, futures are always in a delay because that's out of compliance. You cannot be broadcasting live futures quotes. It's against the law. We did have a sell signal here yesterday. We had a top out. This is a dark cloud cover sell signal that we had in crude oil. Today it's pretty stable. The market, the oil numbers didn't disrupt things too much. I could go and check on the CME site right now. But anyhow, so as oil is coming back, this is going to impact certain commodity-driven markets. So we have the the euro US dollar. Oil definitely being at its higher levels keeps the euro from rallying too strong versus the dollar because the U.S. is an oil producer. Now let's look at the British pound US dollar. British pound US dollar has been correcting versus the dollar since the end of February. This here was a short-term sell signal. It is a bearish engulfing line. We already hit the target last week. Now this is a counter trend trade, and all these signals we're talking about today are counter trend trades. However, there's a commodity-driven aspect to the British pound. So as you can see, the trend, the slope of this trend is not too steep. And we did kind of nick it here with this little thing. We're riding this part here. I would say that especially if you see a rebound in oil making a run for new highs, that the British pound US dollar is also going to do the same thing. I would key off of the recent low that was set last week here. If you're an aggressive bull, I would say that 37.78 is your risk level. So anything above here, you could be, it's a low risk buy right now. Targeting, I would say at the very least $1.40 to $1.41 even. You can look at it on, if this is only a corrective move and if the pound and the US dollar trade is actually turning, which I don't think it has, then you're looking right around here to about here as your buffer zone. Let's get this fib out of the way. Okay, so we already hit the downside target from this sell signal. This was just a correction. Remember, this market's in a bull market. So if this is going to be an extended correction, then a failure from $37.78 is what is needed to confirm this. That would definitely mean that we're making lower move lows after lower move highs consecutively, which keep the correction intact. Because of the high price of oil, it's hard to really sell off the pound too much. As long as oil stays strong or continues to go higher, most likely the British pound US dollar will be making a run for new highs. And don't think that this high that we capped out at the end of February can't be taken out within just a couple sessions. This market, when it moves radically. So if we don't get halted here in this little target zone here and then fall back on support, then odds are this bull is raging and it's not going to stop. So be very cautious. If you take out this upper target pivot here, then you're definitely looking to accelerate the trend back to the upside and challenge this $42.47 level. All right, let's look at the US dollar Swiss to wrap up our European currency analysis. What we have here is we have the US dollar Swiss right here that gave us a bearish engulfing line sell signal. That's right. Bearish engulfing line sell signal. So as you can see, we're doing this all live for you on the forex-trading-unlock.com website. You can do your own analysis there as well. All right, so the sell signal. Now this market obviously is in a bullish trend since the beginning of the year. We are going to take a look and see what kind of retracement we can find here. All right, so this one, ironically enough, the Swiss has been moving more against the dollar or the dollar's been moving more against the Swiss than it has against the other European currencies. All right, here we go. Now we have some levels to look at. So as far as a retracement, now if you want to know the actual targets calculations for using these signals, these high probable Japanese candlestick patterns, read the book, High Probable Japanese Candlestick Patterns, that I mentioned at the beginning of the video. I happen to have written the book. It's on Amazon.com, and you can learn how to figure out how we have our targets when we really trade these signals, which actually give us some nice trades lately this year. I have to say it's been very active We're loving the swings in the currency markets and all the other markets too as well. So bearish engulfing line sell signal here is targeting this 91.22 area. This is, markets tend to go out like they come in. So if you look at it like this and you put a vertical line through our newer move high day that was yesterday. So if this is, if markets truly go out like they come in, and they don't exactly do, but they typically have somewhat of a similarity, then that would put us with a very good chance of coming back down towards this 91.22 area. Very steep slope, just to keep the trend in an uptrend and make it more mild. That would be something that would be healthy for the market. We have a lot of support here as far as what's keeping this trend intact. So if we fall into this area and get a bounce, it'd be a very healthy retracement before the US dollar bull comes back against the Swiss. As long as oil is rallying, and as long as the 30-year bond continues to tank, that's something that we looked at the beginning of this video, it's going to be hard for a lot of currencies to become bullish versus the dollar, especially if they are weak and deficient in oil. Switzerland doesn't have oil. They have to purchase oil. Even if they don't have that much demand, it is a cost of transportation, a cost of inflation. You understand that. The EU also has only two countries really bailing them out now. That would be Germany and Switzerland. Switzerland was propping up the euro for years. We know what happened when it decoupled that 3 years ago, and now it may come to the point where Switzerland has to start coming in to do that as well, as to support the euro to help support the EU. Remember, we're post-Brexit. The UK does not fund the EU anymore. They're not bailing out Spain, Italy, Greece, and all the other countries that are now fledgling because of the COVID-19 and the lackluster recovery of their economies. So we have our target to the downside for the US dollar Swiss. We have no questions on the chat. All right, let's go to our US dollar JPY. This one, look at this. Oil topped out on Monday. US dollar Japanese yen topped out yesterday. So we have a short-term sell signal here as well. I would key off of this high from yesterday around $1.925. Trading below here keeps us bearish. This is a counter trend trade. We are not trying to catch a top. However, this is a short-term sell signal that we have here. This here is also a dark cloud cover. Remember, we had that other one, dark cloud cover sell signal. All right. Oops, we don't need a space there. Let's put this up here. Okay. So what are we looking for here? So US dollar yen, this is just like the US dollar Swiss. It's had a very steep rally. We're going to take the current wave up and try and come up with some levels for you. All right, now we were bullish this market, looking for 107.5 to 108.5 over the next couple weeks. It already hit. It is already done. So we got up to 109.26 yesterday, or was it 109.23 yesterday was the high. So we can move this down slightly. Okay. All right. So this is our risk level. So for your aggressive bears, this is a level you can sell against. I would be very, very cautious. Only if we fail from this 106.58 do we really get bearish. Otherwise, I think you're going to see this as a nice corrective zone for a bounce, and then we'll have a rally. Should oil start to collapse and head towards, say, below 60 down to $55 a barrel, then you might see an extended correction in the US dollar yen. However, not so is the case right now. It is just not the case. The other thing too is if you see a continuation of the free fall in the gold market, which right now, let's see, that's a dollar index, XAU. All right, so the gold market, remember how I said we had a bullish engulfing line buy signal? The gold market has been in a free falling trend. It is the inverse of the US dollar yen. Irony of it all is gold set a buy signal yesterday. Remember, we mentioned that at the beginning of the video, how that would come into play. Oil and gold, besides interest rates, definitely influence the US dollar yen trade. With oil capping out on Monday and having a short-term turn, and with gold bottoming out yesterday and having a buy signal, this helps to reinforce the sell signal. So as long as gold is rallying, as long as oil is not rallying, then you have a good chance of pressing this correction down to 107.09. Now remember, this level here, 109.22, this recent high from yesterday, I'm telling you, do not fight any rally above here. This isn't a bull trend, higher move highs, higher move lows. We are coming off of a higher move high. Normally, if we didn't have these commodity influences in this trade, I would be not as leery. Like when it comes to trades, you want to trade with the trend. Those give you your highest potential chance of reward on those trades. Counter trend trades, remember, never try and pick a top or a bottom. It doesn't mean you don't take a counter trend trade, but you have to realize your risk and know that your probability of success is lesser. However, when they do hit, they typically hit very well. That's the whole part of risk reward. Everyone should basically understand that. If you don't, please stop trading markets until you do. So anyhow, with that being said, we have the US dollar, Japanese yen, that if you took the commodity trade off the table, this would be a very viable sell signal. Do they always work? Absolutely not. But when they do, they're fantastic. You have low risk and a high probability. Look at our risk reward. You're risking the close from yesterday when the sell signal was triggered, and now you actually have a chance to sell it higher than you could on the close. So right now, if you were to sell it at 108.62, your risk is 109.28. You're risking basically 60 pips. On a trade that if you get down to the bottom, we're looking at 108.62 now, down to 107.09. You're looking at a trade that is 150 pips. That's more than a 2-to-1 ratio. If anything between 2-to-1 and higher those are the trades you want to take. You never want to do a 1-to-1 or anything less than 2-to-1. This is pushing 3-to-1 ratio. That is a fantastic risk reward, especially for a counter trend trade. If this was a trend trade, then your risk reward, even if you were at 2-to-1 or just around where it's at right now, typically will end up yielding a much higher target and trend move, because if it's with the trend, that's usually where you get your most accelerated moves. All right, so we have the US dollar yen trade locked up. Now, should we go breach this high? Now, like I said, we had 107.5 to 108.5 as our targets to hit into this week, maybe next week. This is what we've been talking about for the past month and a half. So as we hit our targets very quickly, you can see how accelerated this move is. And just like the Swiss, if we go with our formula of markets go out like they come in, then we have a very good chance of correcting back into the zone, probably over the next few sessions into the rest of this week, into early next week, and then most likely balance our trend and start going to trend higher once again. Especially, remember, if gold all of a sudden starts to tank and if oil starts to rally, it's going to be super hard pressed for the US dollar yen not to continue to make higher move highs. We're looking at, it could be, let's see, we have to go back to the weekly. Where we're at now, we're looking at the challenge up here. We're looking for 109.83, which comes ironically not too far from one of our upside targets. So this would be a multi-month target. You can barely see it on here. So 109.90. We're not far away from that, folks. We already hit a top already of 109.23. Another 70 pips. Higher move highs. It's a major weekly breakout to the upside. Very strong, the US dollar versus the yen. It doesn't mean that just because the dollar index has been rallying, remember, the pound has been rallying versus the dollar. It's very strong. It's the second biggest component in the dollar index. So we have divergence where the euro has been very neutral. It's not necessarily bearish. Those two large components are keeping the dollar index from being a very aggressive bull. So currencies like this that are very reactionary to oil and other things, they are definitely being hit by the dollar. Now let's look at the Australian dollar, US dollar. This is one that we had a nice sell signal. We came down and hit our area last week. Now as far as have we bottomed? Well, with oil suppressing, that keeps this more in a neutral trade. One thing you have to key off of the fact is that we did not make a significant lower low. We could have a shoulder and a head forming here. Maybe we're getting ready for a rally to create the next shoulder before we have a big sell-off. I would say the only reason you could have a big sell-off in the Australian dollar, US dollar, would be a confirmation of slowing in the economy, especially with China and production. And a big sell-off in oil. Right now we're looking at oil in a corrective way. It's just coming off of being overheated on its rally basis. We're not looking for a turn in the trend, that's for sure. Unless we see a big significant sell-off in oil, I think you're starting to establish a range more than a top with the Australian dollar, US dollar. So from this sell signal that we had back here from the other day, or from a couple of weeks ago, we've reached our downside target. This has been in a bull market. This was a bearish correction that we were looking for. We've hit it. Now we're being neutral as the dollar tries to remain strong, but as the dollar gets a correction, I think it's very likely you'll see the Australian dollar, US dollar continue to move a little higher. I would key off of the lows that we set over the past week as your support. If you're bull, you want to be long against this. A failure from these levels, though, has us flirting with this 75.64 level, which would confirm lower move lows, which right now in the short run over the past couple of weeks, Australian dollar, US dollar is a bear. Lower move lows, lower move highs, that is a lower trending market. We need to really get above this 78.36 area for us to confirm any true bullish strength. So that's something you want to be mindful of right there. For Australian dollar, US dollar. New Zealand dollar, US dollar is also starting to fall into a range trade. I would key off of that recent high from a couple of weeks here of 73.08. The same thing as the bottom that was set last week. This is going to be a choppy range trade. I think that unless you see a major sell-off in oil once again, or a major slowdown in the economy, then New Zealand dollar, US dollar is probably setting a base to then chop around in and go sideways for the next couple months. Let's look at the US dollar Mexican peso. This one here had a nice sell signal yesterday. It's been coming off of a big rally. We had 121.5 as our target. We had superseded that on Monday. Yesterday we had confirmed a bearish engulfing line sell signal. This market's been a bull, so let's see where we can go to. We'll take this recent low, major low, and recent major high. We'll take this horizontal line, we'll plant it right at the 50, and we'll pick another one around the 0.618. Get rid of this fib. So here's our target zone. This would be a key area, is 2055. That's a good balancing point where we've had recent highs and also support. As long as it stays support, I think you will see this start to bottom here and then continue back up. As long as this market is in a bull, it hasn't confirmed any real change in trend on a long-term basis. I think what we are going to establish is a choppy range trade, somewhere between basing around 20.5 to 20 pesos to the dollar, and then setting an upper range where if we take out this high that we had set yesterday or 2 sessions ago, above 21.62, we're targeting 22 to 22.5 pesos to the dollar. That's what we think is our upside extreme. Most likely it looks like now we're going to settle into some support here and then start to chop around between 20.5 and 21.5 pesos to the dollar. That'll be interesting to see how that is if you're going on spring break or planning on going to Mexico as things open up. Now's a much better time than it was a few months ago, definitely to buy your pesos. US dollar Canada, this is a tough one here. We had hit our short-term upside target off of this low that we had set, which was a buy. This was a bullish engulfing line buy signal. We hit our target all within the day. Afterwards, now we're settled into a neutral trade. As oil has topped out, and slowed, we have turned into a neutral trade. The US dollar Canada is a major bear, so I would expect this to continue in the long run. As far as what trade there is, we don't have a signal for you right now. It's neutral. With oil stabilizing, interest rates kind of bottoming, and the economy's questionable as far as how they will accelerate or decelerate, is pretty neutral. But overall, this market's a bear. Only above $1.2746 would we be neutral to short-term higher. Long-term, we're still a bear, the U.S. dollar Canada, and especially as long as as long as crude oil remains in a bullish market. It's going to be very hard for the U.S. Canada to not stay at the levels it is at or start to establish a range here. And definitely, if we fail at $1.2464, good night, folks. It's all over. It's a free fall, and the bearish trend continues. So remember the Dixie, where we started the dollar index, we had a bearish engulfing line sell signal that was triggered right here yesterday. So this is very big for us to maintain our posture, at least for the short-term trend when the dollar is concerned. Well, I'm having little finger problems here. Okay, Euro US dollar. Since we've been talking and this market's pulled back a little bit, we have the piercing line buy signal from yesterday. We're going to watch this trade. I would say that, remember, these are counter trend trades, but the dollar right now does look like it's ready to pull back. We will see how the bond note auction goes at 1 o'clock today. So anything can happen this afternoon. And then we also have to see how oil reacts as well off these numbers. So we'll see. It's early in the trading day. It's only 2 hours into the New York trading session for equities. Remember, we have until 1 o'clock. We still have another 2.5 hours before the Fed has a note auction. Interestingly enough, it's a 10-year note auction. There's no 30-year being done, and the fact that we are at such low levels and we are using 10 years to refinance is beyond a shadow of a doubt, I think, one of the worst things that we could be doing. I understand why they're doing it, because the rate on the 10-year right now is much better than the 30-year. Because if you look at where it's at, it hasn't come off like the 30-year has. However, it's very short-sighted thinking, because in 10 years that debt has to be replaced. Interest rates will be much higher than they are at the 30-year level right now, and we'll have to revolve all of that short-term debt into higher rated securities to pay to refund just that debt alone. So these are very bad economic decisions. Well, we have a new president, we have a new leadership for the Treasury Department, so obviously this is what they're going to do, and short-sighted thinking to bring in as much cash as possible just to cover things in the short run always have very bad implications. I'm telling you, watch the 30-year Treasury bond. It's going to be a zoo for the next couple of months. And as we continue to go through auctions like this, and they're going to be very excessive, I mean, we have the new stimulus packages that have to be paid for, and if they're paying for them with short-term liabilities for long-term debt, that financially 101 is a major, major mistake. It always backfires. So, but there's a big trade there for you to capitalize on, and while your taxes are going up and inflation is coming into the marketplace, at least you can make more money and afford to pay for all these higher prices. So with that being said, I want to remind you once again to subscribe to our YouTube channel, Forex Trading Unlocked, and our Twitch channel, Forex Trading Unlocked, as well as, oh wait, how do you trade extreme bear like G? Okay, we got a question here. We're going to go back to our screen. Okay, so we have a question from Gel Luminati. How do you trade a certain extreme bear like British Pound JPY, and does the US dollar index sometimes work against the T-bond? Absolutely, the US dollar index works against the T-bond. The reason the dollar has been strong, though, over the past couple months is because the bond market has been in a free fall. So while the short-term interest rates have been staying at their ceilings, the 30-year bond has been forcing higher rates up. Remember, when bonds go down, interest rates go up. So because of that, there is a demand when you have a higher return. As rates go up, and then you need to demand a higher return somewhere else to balance that. So as far as the dollar index, it's been the reason the dollar has been a bear for months, for the past year. Some people are saying we're only in an upside correction. Well, we were in an upside correction for the dollar index for the first month and a half of the year. Then we came back in February, but we made a bottom just a couple weeks ago, and then since then we've set that higher move low, and we've created a higher move high. This is because of the 30-year Treasury bond, which has been in a free fall. When interest rates continue to go lower like this, there's a demand for US dollars, because the bonds are a flight to quality market. So if you're not getting it in the bonds, you're going to have to go to the US dollar. Okay, so now let's look at, you want to look at the British Pound JPY. So all right, for you, let's go to the British Pound JPY. This is a great question. You are obviously a global trader. So British Pound JPY. The British Pound is a bull against everybody right now. Remember, post-Brexit, the fact that the UK, even though they got to deal with the COVID, post-COVID, whatever, responses and lockdowns in their economy, they don't have to fund the EU anymore. They're not being told that the UK has to subsidize Italy, Spain, and France, and a bunch of other countries. This is now on Germany and Switzerland and a couple other countries that are super unhappy with this. So the British Pound GPY, as far as being a bull, how can you stop this? Okay, well, look at this trend. This is a major bull. Now let's look at if you want to see how much strength there is out there, look at the British Pound versus the Australian dollar. Pretty neutral. That's because of the oil trade. Let's look at the British Pound versus the New Zealand dollar, and we're just using the pound as the overage. This is also strong, but fairly neutral. Then you look at the British Pound versus the CHF. Remember, that's a flight to quality currency. The pound is crushing the Swiss. Swiss don't have oil. Interest rates are going higher in the U.S. This cripples the Swiss. When the Swiss is weak and the pound is stronger than the U.S. dollar, so that's why it's crushing the Swiss. Okay. So also, the British pound versus the euro. We have post-Brexit. Look at this. It's about to make higher move highs. So the British pound itself is a raging bull right now. Even against the U.S. dollar, we see that although it's come off of its highs, this is just a short-term correction. It's been in a bigger bull market against the dollar than these other currencies have been. So for the British pound, JPY, which is your question, until you see a sell-off in oil, a major sell-off in oil, or you have something, an event that would hit the UK economy to where the oil trade is no longer strong enough to support the British pound, meaning that, for instance, let's say unemployment starts to skyrocket in the UK, and let's just say that their economic numbers start to severely slow. Remember just how the UK is no longer there to help the EU. The EU is not there to help the UK. So it's a double-edged sword when it comes to that. They have their sovereignty back and control of their currency and interest rates, which they did still to some degree pre-Brexit, but now they have full control and reign. So as far as the British pound JPY, if you are looking for a sell, I would say definitely wait for a signal, and I would look more for dips to buy. Think about this. With the turn in oil, British pound JPY, with the sell-off in oil over the last 2 days, the British pound has actually been railing. Okay, with the sell-off in oil, the yen has been rallying against the dollar, but obviously it's not going to be able to do so against the pound because of the oil trade. So as far as looking for a signal, now here's one here. We had a sell signal right here just a week and a half ago. It was a 2-day corrective move. That was it. And then boom, all of a sudden, we have been grinding higher over the past week. So when you're talking about counter trend trades especially, you need to have a very valid signal and realize that your opportunity risk is much less than it is when you are riding the trend. Especially when you look at the pound and its strength, if we didn't have the oil trade that was helping to drive strength in the British pound right now, then I would say that counter trend trades, you have a better chance of capitalizing off of them. I did not trade the short trade with the British pound when it had its sell signal a week and a half ago. My major reason was because oil was rallying. I couldn't see how it could have a sustained slide. And if you look at the British pound US dollar, it sold off while oil was still rallying. Oil topped out 2 days ago and has been breaking, and now the British pound is rallying again. That's because this is just a correction. Now, unlike the one we just looked at with the yen, we actually got a sell-off. But you know what? Before that, we had sell signals along the way that over the course of from January through February, if you took those sell signals in the pound US dollar, you would have been grinded through and just crushed. So the British pound JPY, if you want a target, I can give you some targets. Let's see. Let's look at the monthly. Okay, so let's get rid of this arrow here. So you can see that we have a key high right here. We are coming off this low right here. So this low is the base for this rally for the British pound JPY. This is a steep slope. Is it due for a correction? Probably. But you can see that we had taken out this high recently right here to swing high. We did that yesterday, and now we're rallying towards this $1.5658. I think you have to this is probably in a wide range, if you would say right now, over the past few years. Are we ready to break out? Yeah, I think so. So if you're trying to sell, what is this, Gel Illuminati? If you want to try and sell, do you have a stream bear like the British pound JPY? So this was a bear for kind of a couple years, but if you look at the overall trend here too, since 2013, it's been neutral to higher. We came off of this extreme high back in 2015. If we come even through here and we use the last recent swing high, lower move high for this trend before the last lower move low. here is your downward trend. We wedged through that and we came out of that a couple months ago. It's an upside breakout. So on the daily basis, we're looking for higher move highs and higher move lows to continue. I would look for a sell-off to buy before I try selling into this one. I just think you'll drain your capital. And like I said, like even we had here a very valid sell signal. Counter trend trades, when there's another major driving force that's trending to help support this type of trend, don't fade it. Don't. It's the graveyards of Wall Street are filled with people that have tried to pick tops and bottoms. Do not try and pick a top in a major bull market. It's just very, very foolish. Not that if the market turns that you wouldn't be trying to buy into what is the eventual top, but that's the risk you take on that too. But right now I would say stick with the trend, and unless you do see a big sell-off in oil, don't try and short the British pound JPY. So hopefully I answered your question, my friend. And thank you very much. That was a really good question because it tied in the things that we were speaking about as far as treasury bonds and things like that and how they interrelate. And we don't just talk about the major currency crosses versus the dollar here, folks. If you have any type of questions that goes with currency crosses, like when you go to our website, forex-trading-unlock.com, and our nav bar, if you just go to our Forex navigation page, then as you toggle down, you can see that we have your major currency crosses like the euro, the yen, the Canada. These are all versus the dollar. But then we have them broken down. Like you can look at the euro US dollar, the euro pound, the euro Aussie. Same thing for the JPY. We have the Swiss versus different currency crosses, the Australian versus different currency crosses. You want to talk about the Aussie, New Zealand? We can talk about that. And we got charts we can pull up right away. We have the pound versus multiple things, just like we looked at just recently. We had the New Zealand dollar, we had the Hong Kong dollar, Canadian dollar, the South African rand, Turkish lira, Bitcoin. You want to name it, we can cover these where the charts are all ready to go for us very quickly. So anyhow, I want to thank you guys for joining us here. It's been a nice little webinar. We are going to put up in review the webinars that we've had for this week for our weekly analysis. You can see how we've been doing. We've been nailing these swings lately, folks. And we had, if you listened to our video yesterday, you knew that we were looking forward to the close to get our signals. We've talked about them today, which ones are good, which ones are bad, and the good, the bad, and the ugly, if you will. So thank you very much for your time, and remember once again to check out the book, High Probable Japanese Candlestick Patterns, that I wrote. It's available on Amazon.com in paperback and Kindle versions, or you can go to our website, and at the navigation bar at the top of Products, Courses, and Services, you can pull up a link to our page that will give you some free reading on that. So with that being said, thank you once again. You have a great trading day, and we'll see you soon. I'm Teddy Keckstedt from Forex Trading.